All right. A couple more stragglers coming in, but I think we'll go ahead and get started. Um, I'm assuming everybody can hear me, and if not, we'll somebody throw up a chat if you can't. Um, Thanks to each of you for joining us today to learn a little bit here about cryptocurrency and related topics. I think you'll find it fairly informative and fun. It's probably going to be just touching the surface of what we could spend hours on, but a few administrative matters before we get started. First, I think since we have nearly 100 participants, you're going to be muted during this presentation. If you, as a result, if you have questions, and we encourage them, please use the Q&A button at the bottom of your screen there. You'll see it's a Q&A. Don't use the chat. Use the Q&A button, and you can log your questions there. While the panelists are presenting, I'll be looking through those questions, and I'll try to ask as many as I can during the Q&A session at the time that we have left. We'll also be recording this session, so if you have to drop off for some reason or would like to share this with others, we'll make this available afterward. We'll be sending a thank you to you, and at that time, you can also ask additional questions if you have them, and we'll try to get those answered and then request a copy of the recording if you want. So let's get started. I believe many of us have heard of blockchain, Bitcoin, cryptocurrency, or maybe you have someone you know that might be involved in a company that deals with this stuff like I do, but maybe you're like me and you've sat through a webinar or a conversation on this stuff and frankly still don't even quite understand it. I think it's all relatively new and confusing, at least to me. So hopefully we can help shed a little bit of clarity to that and get you some answers on maybe some questions you might have or educate you all on this ever-growing and expanding space. So we have a stellar panel for you today. It's comprised of folks I've known for quite some time. Andy Murray, a seasoned CFO veteran in the Front Range here in Colorado, I've known for a long time. Josh Schroge, similar to in the CFO ranks, maybe just a bit younger than folks like Andy and me, although he has less hair for some reason. And Josh sees a lot of types of companies given his Firestone CFO role that he performs, and he sees other companies as well. And then finally, Josh Finkelman with BXE Capital. I'm not going to go into any details on these guys as they're going to share a bit about their backgrounds with you and some of their experiences. So we're going to kick it off with Andy Murray, who is currently the CFO of Zero Coin Electric Company, which owns Zcash, a cryptocurrency, followed by Josh Schroge at Binance US, that's with a B. And he represents an exchange that allows you and others to trade and transact in various cryptocurrencies. And then finally, we'll wrap it up with Josh Finkelman with BXE Capital, representing a very active investor in this space and someone who's very knowledgeable about it as well. So Andy, we're going to start with you and kick it off.
Great. Thanks, Lou. And thanks everyone for joining today. We appreciate you being on this. As Lou mentioned, my name is Andrew Murray. I get to lead off and plan to talk a bit about my background, high level on cryptocurrency, talk about the Electric Coin Company, which is a company I work for, and Zcash, the cryptocurrency, which is the company or the coin that the company created. I'll start with my background. I'll start off by saying I am the least crypto knowledgeable of the three of us, so I've asked the other two panelists to feel free to correct me if I state something incorrect. I also have a lot of information to cover, so to make sure I don't miss anything, I wrote it down and we'll be reading some of it, so sorry about that, but hopefully it'll be worthwhile. So for just over 2 years now, I've been the CFO at the Electric Coin Company, which is the software company that created the cryptocurrency called Zcash. I've been the CFO of multiple technology companies, including 7 other software companies, one of which I took public and operated as a public company. During that time, I've raised over $140 million in investment capital. My undergrad is in finance. I have an MBA with an emphasis in international business, and I'm a certified management accountant. I'm currently serving on the board of directors for Belco Credit Union, a member-owned Denver-based financial services company. On Baseline Engineering, a civil engineering firm, and on the University of Northern Colorado Department of Accounting Advisory Board. So how did I end up at the Electric Coin Company? The company identified the need for additional business and financial expertise and searched for a CFO, a software CFO, with solid experience, positive to work with, team player, honest, good person. And when they couldn't find one, they decided to hire me anyway. But seriously, I was very fortunate to be selected to work at the Electric Coin Company, to get to work with smart, great people operating in an emerging field. Now, high level on crypto. Defined. Crypto itself, defined as a person who adheres or belongs secretly to a party, sect, or other group. This definition fits my impression of many people in the crypto field. They can be very secretive. Defining cryptocurrency, which is a digital asset designed to work as a medium of exchange, currency, or storage of value that uses strong cryptography to secure financial transactions, control the creation of additional units, and verify the transfer of assets. How is it created? Software, or protocol as it's referred to, is developed to operate on a blockchain, also called a distributed ledger. In the protocol software, the developers incorporate all the specifics of the coin, like whether it is a public coin released over time, such as Bitcoin and Zcash and others, or a private coin released up front, such as what JP Morgan did in creating an internal settlement ledger. Key attributes include a total pool, or the total amount of coins able to be released. So in Bitcoin, that was 21 million, which is also the same amount in Zcash. But the amount varies with other coins. It also defines the type of mining, the type of coin, whether it's a stable coin, which is a coin tied to a fiat or dollar. And by the way, I also learned in my role that fiat is another name for a government-backed currency or dollars, a USD. And I always thought fiat was a small Italian car, but I guess that's not the only definition anymore. So a stable coin, a coin that is tied to an asset. So if you think about it, a stable coin could be, for example, a coin tied to the value or a pool of dollars to US dollars. So it removes some price volatility, and there are different types of stable coins that I won't go into. You may hear the term altcoin. Altcoin covers a coin other than Bitcoin and stable coins. So essentially, if it's not a stable coin, it's not Bitcoin, it's an altcoin. Everything else seems to fit in that definition. Coins can have different features, such as the privacy feature available with Zcash, or programmability features, such as on the Ethereum network. With cryptocurrency, every transaction is tracked and managed on a decentralized public blockchain, instead of by a centralized institution like a bank. This also means that cryptocurrency, or most cryptocurrencies, expose your full transaction history and holdings to everyone. Economic incentives are provided to properly maintain and communicate the ledger. Maintainers of the ledger, also called miners, are incentivized to behave honestly through a combination of block awards and transaction fees. Some cryptocurrency benefits include protection of assets from seizure, protection from hyperinflation, portability of value, and censorship resistance. Some negatives of cryptocurrencies have been they have been compared to Ponzi schemes, pyramid schemes, economic bubbles such as housing bubbles, and even the dot-com bubble. It has been described that cryptocurrency is based on the willingness to ascribe value to something that has little or none beyond what people will pay for it. Kind of sounds a lot like gold and diamonds, if you think about it. Many governments have taken a cautious approach toward them, fearing their lack of central control and the effects they could have on financial security. Here's some interesting data points. In May of 2008, 10,000 Bitcoin were paid for 2 Papa John pizzas. So if you correlate that to the current price of Bitcoin, that means someone paid $108 million right now for 2 pizzas. And at one point, they were worth over $200 million. I hope those were really good pizzas. One U.S. representative publicly described Bitcoin as an unstoppable force. I think it's definitely on the trajectory for that. In May of 2019, there were over 1,800 cryptocurrencies and a large number that are questionable. Historically, there have been a lot of fraud activity. Tax classification currently lists cryptocurrencies as property, as defined by the IRS, which dictates a specific type of treatment, such as short and long-term capital gains. Now, some information on the Electric Coin Company, our company. We're a cross between being a small private company, considering our small employee count, yet we release transparency reports, giving information to the community, somewhat like a public company, and yet we are dedicated to progressing Zcash and the Zcash community, which is more like a not-for-profit. We are not pursuing other profit opportunities and are focused on Zcash. Our role is to build software in support of our mission to empower everyone with economic freedom and opportunity. We believe that everyone has the right to privacy, that the pursuit of economic freedom is virtuous, and that the future of money is an attack-free, censorship-resistant digital currency. Electric Coin Company launched and supports the development of Zcash, a privacy-protecting digital currency built on strong science. Since its launch in 2016, Zcash has grown to be one of the most valuable and admired cryptocurrencies in the world. Although we discovered the underlying scientific principles and designed the Zcash protocol, we do not control the currency, we do not control its mining, and we do not control its distribution. Every user of Zcash contributes to its decentralization, helping to protect it against failure and corruption. And now I'll turn it over to Josh Schroeder. Josh?
Hey, thanks, Andy. And thanks, Lou. Typically in June, we have this great event that a lot of our accounting and finance brethren get to go attend, that Lou hosts at DU, and this year it didn't happen. And so that was a lot of the impetus for trying to create content and suggest to Lou, hey, maybe something about this emerging space. There's quite a few companies in the Denver and Front Range area involved in it, and it's presenting a lot of accounting challenges. And not everyone on this call is an accountant, but it felt like a good relevant topic. So my exposure to this asset class came, as Lou mentioned, through Firestone CFO, my small consulting company that I run. And in 2016, we picked up a client named Bridge 21, which was involved in cross-border payments, facilitated and cost-effective by using Bitcoin as the medium, as opposed to SWIFT or other traditional banking channels. And it was the initial exposure, and it's still one of the core value propositions of this asset class, is that disintermediation of traditional banking channels, which have a lot of cost and time delays involved in these international payment transfers. So after that, I was chief accounting officer at Shapeshift, which is a Swiss exchange, crypto-to-crypto exchange. And so think of it as a sort of a marketplace where people can swap. However, it had a large Denver office and worked there through the last rally cycle in 2017 and 2018. And now most recently, the CFO at Binance US, an affiliate of the larger Binance.com international entity, but solely licensed and regulated in the United States. And so it's great to be back in this space. And there are a great many accounting and finance challenges, as well as just a world to explore and an ocean to boil. So lots of things that are complex to understand. So it's going to be tough to cover all of it in the time that I've been allotted, which I'm just checking. So let me delve into a few things about exchanges. Backing up from that, one question is, well, how do I get these things? Like, is it Bitcoin? Is it Ethereum? Is it Zcash? Is it some other coin or token, as we refer to it? The old days, not too long ago, only maybe 8 years ago, you had to either mine it or someone had to send it to you, like in the pizza example that Andy gave. Now we have exchanges, which first came about, probably 2011, 2012, perhaps, maybe a little later, but a place where you could on-ramp with USD or other fiat currencies, also as Andy referred to, in order to purchase these assets. And that's what this exchange ecosystem is. And the exchange ecosystem has grown tremendously since 2017, since the last rally cycle, when everyone heard the buzz because Bitcoin hit a $20,000 USD equivalent, its all-time high. This ecosystem has regulated, licensed entities, audited. Coinbase is one of the largest that hopefully have heard of, and they are, rumor has it they're preparing their S1 and may go public within the next 12 months, maybe longer, maybe 24. But there's been a great deal more legitimacy in the marketplace and comfort. You may have heard of Mt. Gox and how that was hacked. There were issues with BitInstant and interfacing with Silk Road assets. And so, there were some dark stories that came out of the early days, but you could say the same thing about a tremendous number of cycles throughout human history. I can just go back to the 19th century with, the Western gold stagecoaches getting robbed. And so, as this space evolves, these exchanges, are much more like traditional institutions. You might know Robinhood or Schwab. You can register with your KYC information, as know your customer, and go through AML processes, anti-money laundering. So you have to give social security numbers so you can get your 1099B, your driver's license, proof of address. That's for traditional platforms, because maybe you're thinking, I'm going to use USD and buy, Tesla stock. It's the same thing with these exchanges. You have to provide that information because you are participating in a financial marketplace. That's, maybe the regulation is nascent, but it's emerging and getting greater form. And so you'll provide that information and connect your bank account and be able to send USD onto that platform and then participate in this marketplace. The marketplaces, the exchanges, are what lend a great piece of price discovery to this asset class. And I know there's going to be a lot of questions. Well, why are they worth anything? And how do we determine their worth? Should I own any? Should I have exposure? And these are things you can spend a lot of time researching. In fact, I do every day. And it can be at times a mystery, but the marketplace does help set what the value of these assets are. Many of the exchanges are becoming more like traditional marketplaces, like I said, looking at derivatives, futures, becoming prime brokerages and so on. And I think we'll see an evolution in this space where these exchanges are just, considered traditional financial institutions or even being acquired by them, or folks like Fidelity also going into this space, as an example, perhaps doing analytic platforms for subscription or exposing folks in their 401ks to be able to participate in the upsides of these price discoveries in this asset class. To speak more, quickly about exchanges, in addition to either having to mine it or be paid in it, they are really the primary way to acquire cryptocurrency at this time. There's pairings, so it's not a universe of crypto. So if you go outside the US, there may be platforms with hundreds of assets and hundreds of pairings, right? By pairing, I mean USD to Bitcoin, Bitcoin to Ethereum. So you have crypto to crypto or crypto USD pairs. The pairings and the listings in the US are much smaller, much more highly selected by the exchange to ensure compliance with domestic regulations. So you may wonder, why can't I get that asset or why can't I trade in that? Well, a lot of that stems from regulation. And a quick note on that, there are groups, I'm in the Chamber of Digital Commerce and the Blockchain Association through my work with Binance US. We help provide guidance to the Hill on House bills. We think about tax policy. And right now, you may not get a 1099 from your exchange. You may get a 1099K, right? But I'll tell you that I believe 1099Bs, like you would get from brokerages, are inevitable. And so yes, as this universe of crypto moves from the Wild West into more of a traditional space, first, you're going to have greater feelings of comfort, greater price discovery. But unfortunately, you'll also get all the other attendant items like regulation and compliance and tax. And my time's wrapping up, so I'll just say, I'm on LinkedIn, I'm public. Please, if you have those kinds of questions, tax related or other, and that doesn't mean guidance, just general ones, always feel free to reach out. I'd love to talk about this topic. And with that, I'd like to pass it on to Josh Finkelman.
Thanks, Josh. Appreciate it. Mandy, thank you for having us today. So my name is Josh Finkelman. I'm the co-founder and managing partner of Big C Capital, which was back in 2017, in the spring of 17, we launched what is Colorado's first digital asset investment fund. So we take in capital and we deploy that capital into the space, and we buy, do a lot of research, and we buy individual tokens, right, that we hold in kind of a basket, a portfolio, if you will. And I really wanted to just take the time to kind of just unpack some of this. Some of you might know this space really well, but for those of you who don't, you might be kind of asking yourself regularly, like, what's the big deal, right? What's the big deal with all this? Well, about every 30 or 40 years, we see kind of a really big technological breakthrough, right? So in the 70s, it was computers. And then in the kind of mid to late 90s, it was the internet, right? And now with blockchain technology, we're seeing kind of this explosion of kind of the next wave of innovation in blockchain technology that's going to enable and allow a lot of different things. And if you really disseminate it down to its core, right? Blockchain technology, and blockchain, by the way, this technology is the underpinning of all cryptocurrencies, right? They all run on what's called blockchain, which are distributed ledgers. And essentially, the key in, or the value proposition, if you will, of blockchain technology is it can be used as a disintermediation tool, okay? And it can remove trusted third-party intermediaries. And let me give you an example. So if you go to Starbucks and use your credit card to buy a drink, right? There are several different trusted third-party intermediaries that facilitate that transaction. You have an acquiring bank, an issuing bank, a processor, Visa, MasterCard, Discover, and typically an ISO. And they facilitate that transaction, and they also take a fee, and they slow down that transaction, right? Well, blockchain technology, you can remove all those trusted third-party intermediaries. You don't need them, right? Now, that's one of 100 examples of how this technology can be leveraged, right? And the big thing why, it's our belief that this technology is going to be as pervasive as the internet is because we're going to see money digitize, right? We're going to see money change from a physical format to a digital format. And there are many central banks around the world right now that are working on launching a central bank digital currency. China right now actually is testing their central bank digital currency in different cities throughout China. So what we're going to see, kind of much like in the 90s, we saw the internet economy, right, explode. You're going to see probably over the course of the next decade, the digital economy, right, explode. And you're going to see us as a species move into the digital economy. And when we do that, we're going to stop transacting in physical currency, and we're going to start transacting in digital currencies, right? And eventually, this technology will allow you the ability to basically send value through the internet, really as easy and as quickly and as cheaply as you send an email, right? That's where we're eventually headed. So TCP IP technology, the underpinning of the internet, kind of democratized being able to send data through the internet instantaneously. Blockchain technology is going to democratize sending value through the internet, right? It's going to create MOIP, which is money over internet. We'll be able to send value, transact throughout the world very quickly and very easily. Now that's just, again, one of 1,000 different scenarios that I could chat about, but I have a really compressed time to talk. So I just want to kind of highlight these things. Now, when it comes to asset management is really going to be disrupted. And I'll kind of explain why. So the New York Stock Exchange traded about 1,600 hours last year. Bitcoin traded about 8,700 hours last year, right? So these digital assets trade 24 hours a day, 7 days a week, 365 days a year, globally across the entire world, right? Well, that's a really paradigm shift where, we're used to traditional exchanges trading Monday through Friday. Now you have the ability to trade digitized stocks, bonds, currencies, derivatives, 24 hours a day, 7 days a week, 365 days a year. So it's just a massive paradigm shift that we're starting to see. And much like in the mid 90s, where there are a lot of companies setting up the infrastructure for the internet economy, we're seeing the same thing right now. A lot of companies setting up the infrastructure for the digital economy, which is coming. But we're still really early, right? That's what's important to note, is that I equate it with maybe the mid 90s for the internet era. We're kind of in that same stage right now for the evolution of this technology and building up the pipes, right, for the digital economy. So you have to understand that, right, that this technology is still early stage. It's iterating. It's maybe clunky at times, but over time, that will dramatically improve. And over time, you're going to see, the 7.5 billion people around the world on board into the digital economy. This again is just kind of a broad overview of the practical applications of this tech. Now, Lou asked me to show you some hardware wallets. So you can store your Bitcoin, your cryptocurrency, on exchanges like Josh's exchange, Binance.us. I just plugged you, Josh, so you can thank me later. You can store your cryptocurrency in the software wallet, or you can store your cryptocurrency in a hardware wallet. This is a key hardware wallet, right? This is a Trezor hardware wallet. And essentially, they're encrypted hardware wallets that hold private keys for these digital currencies. And you can think of, private key is almost like if you look at your email, you access your email account with a password, right? You log in, once you put in that password, you can access and send emails. Well, cryptocurrency kind of operates like that. You have a public key and a private key. That private key is in a way your password. And once you use it, then you can have access to your cryptocurrencies and do as you please. Okay, so I've taken up enough time. So at this point, I'll defer this back to Lou.
Awesome. Thanks, guys. I think we have about 100 participants here, so I'm sure there's a bunch of questions out there. I have a bunch myself. I'm going to save those in case we don't get very many, but I see several coming in. I know based on this last 30 minutes, you are all experts on cryptocurrency now, so that's awesome. Here's our first question. Will digital currency eliminate currency exchange fluctuations on international transactions? Any one of you?
I can answer that. Yeah. They ultimately they will, because right now when you use primarily, right, you use the SWIFT network to send international wires. Because of those trusted third-party intermediaries that facilitate that transaction, usually it'll take a couple of days for your money to bounce from correspondent bank to settle, right? And within that time, you have to account for the FX, the currency fluctuation. Well, there are right now very fast settlement layers like a Ripple, which you can send vast sums of money, billions of dollars, and that money will settle within 3.5 seconds. So you eliminate the need to have that FX, right? So again, this is one of hundreds of different scenarios where this technology is going to dramatically improve our lives.
Awesome. Another question. If Bitcoin keeps getting harder to mine, won't it eventually become very expensive to mine? And or if the price drops way below the cost to produce new ones and no one mines, then is no one recording the blockchain transaction?
Yeah, Andy, you want to tackle this or?
Go ahead, Josh. I'll jump on.
I'm no mining expert in terms of the economics of that, right? But as mining, the complexity of the challenges in mining in terms of resolving, the the transactions has grown, exponentially in difficulty, right? But the price of Bitcoin accelerates. That attracts greater investment resources into mining because they get awarded. And now it's 6.25 post halving from June. So the rewards are increased in value, have increased in value on a USD basis, right? Although the difficulty increases, it should, hypothetically go in parallel. There are times the market fluctuations make mining to be an unprofitable enterprise, in which case sometimes the miners, and I'm going to go off on a tangent, sometimes the miners hold back from liquidating what they produced and live off the capital from the prior rally cycle, waiting for the market to turn. And that has a great effect on the market and the price discovery itself because it affects supply and demand, right? If the miners are dumping a lot onto the market, there's an increase in supply. If the demand doesn't keep up, price falls, and so on. So some of these interesting questions are not so much for now when we're still getting awards of 6.25 Bitcoin every 10 minutes for mining new blocks and thus creating new supply, but rather, in the 22nd century, as the remaining mineable supply drops significantly, the transaction fees will have to make up for the cost of transaction or the cost of mining. However, at that time, what's a Bitcoin worth then? Is it $1 million? Is it multiple millions? So the reward can be very small, but the USD equivalent can be very large. And this opens up a whole universe of stuff like, will we even be measuring things in USD, or will it be some other reserve currency in the world that's digitized that's now reflective of that? But it's a good question.
Josh, maybe you or Andy, could you just give us a Sesame Street version of a miner? What is a miner and what do they do?
Yeah. Josh, do you want to, or I can?
You want to go ahead?
Yeah. So miners, they do two things. They for one, they solve a mathematical problem that is structured as an incentive mechanism. So Satoshi Nakamoto, nobody knows who he, she, or they are. When he came out with the Bitcoin white paper in 2009, he had to incentivize people to basically download the Bitcoin core software and run it, right? And so what he did something really ingenious. And he said, all right, I'm going to create a mathematical problem, an algorithm to be solved approximately every 10 minutes. Whichever computer, miner on the network, solves that mathematical problem, I'm going to reward them with new Bitcoin. Okay. Right now it's 6.25 new Bitcoin approximately every 10 minutes. Well, today's price of Bitcoin is about 10,700. That's a lot of money. So you're incentivizing people to join the network and solve that mathematical problem and support that network financially. The second thing they do is they also move transactions along that ledger. So whenever I send, say, some Bitcoin, actually I reverse it, whenever Josh sends me some Bitcoin, right, those miners basically facilitate that and they charge a small transaction fee for that, much smaller than like, say, a Visa or MasterCard. So miners serve those two purposes.
Got it. Thank you. Do any of you think the US government or maybe like China or any other government entity will ban cryptocurrencies, especially China? Give us you have it. Yeah, this person asked and said, you think there's a 20% chance, 5% chance, 0% chance? 0% chance that the government, U.S. government.
U.S. There's too much ecosystem. I mean, right now the U.S. government is working on a digital currency, just like the European Central Bank and the Chinese central bank. A lot of governments around the world are working on a what they call a CBDC, a central bank digital currency. And in order to create that, they're drawing on the resources and the knowledge and experience of the existing ecosystem, which is the ecosystem is probably worth as much as the market cap of the assets at this point. If you were to sum up all the operating companies, all the people working in the space, all the innovation, it's not the case that the government is just going to create first off, the use case of the central bank digital currency isn't to replace the dollar, it's to supplement, disintermediate the banks during times of fiscal stimulus. If I could put a wallet on everyone's little phone here and be like, okay, here's your $1,200. It's a lot quicker to do that than to go through banks and print checks and so on. That use case aside, when they do that, it's not going to be, oh, we have our digital currency by the US bank, let's make Bitcoin illegal. and if a government did that, it would just push up somewhere else. There'd be mining in other areas. There'd be the network would be supported through other parties in other countries. It's really, I know I could see China coming down with some regulation potentially in the future. It's already more regulated in some ways than it is in other places, but I think it's a very, very small chance at this time.
Yeah. I think that at this point, most governments understand the enormity of this technology, and they're moving quickly to embrace it, much like they did with the internet, right? So, and I believe that, China's really making an attempt to be kind of the leader in the blockchain space, much like we were the leaders in the internet economy, because they really see like, hey, if we can be the leaders of this digital economy, we could kind of supersede and beat out the United States and Russia and what have you. So at this point, it's a bit of a race. And so to what Josh said, I mean, I think they're trying to embrace it and regulate it and come out with their own central bank digital currencies. And so it makes the possibility of them, prohibiting Bitcoin really scarce. And in fact, I think, now this is my view, this is an investment advice, but I really think that Bitcoin is kind of now becoming like this new digital store of value. Call it like a digital gold. And a lot of people are starting to invest in it. And I think at some point, if Bitcoin continues on this trajectory of adoption and price discovery, I think it'll eventually be like a reserve asset, like gold, right? Where these central banks hold gold in their reserves. And I could see at some point, if Bitcoin continues on its trajectory, they start to hold Bitcoin as a reserve asset. There's a company that came out recently called MicroStrategy, publicly held company, and they came out and said that they are using now Bitcoin, holding Bitcoin as a treasury instrument. Mm-hmm. And they bought $250 million of the Bitcoin. And because they feel that we're coming into an inflationary environment, and they want to hold scarce assets that have a lot of liquidity, right? That can be traded 24/7. That's Bitcoin. So, right, we're starting to see the emergence of a lot of different use cases for, Bitcoin and digital currencies.
Awesome. I'm going to kind of combine a couple things here. We're getting great questions, so keep them coming. This is probably for Andy. Two related questions, I think. Is Electric Coin Company planning on an IPO? If not, why not? And relatedly, are there any unique challenges? I mean, assuming M&A comes into the space, and it likely will, I'm sure some companies will acquire for scale or for different diversity in products, et cetera. But do you see any unique challenges in the M&A process or valuations or anything if, say, Electric Coin Company were to get acquired?
Geez, those are really tough questions. I'll take the first one, the IPO issue. No, we're funded. We started with an original funding by founders and outside investors, and have not searched for additional capital. We continue to get some funding from what was originally called the Founders Reward, and I'll back up and describe that a little bit. Zcash was the first coin to come up with a concept to where out of each amount of coins mined, so out of every 12.5 coins mined originally, 2.5 coins went to what is called the Founders Reward. And the Founders Reward was a payback essentially to early days investors and founders, and it became a funding source for the company to progress the coin going forward. Also, it funded the foundation, the Zcash Foundation, which is an independent nonprofit entity. So that percentage bleed off, or that percentage amount, actually created a lot of the foundation for funding the coin and going forward. And because of some different changes and things that have gone over time, the company has not needed to search for additional capital externally. There's also been a decision by the community to replace the Founders Reward, which in the Founders Reward was for the first 4 years. It was to end at the end of 4 years, which comes up, our 4th year comes up at the end of October. and the community has elected to continue this type of funding, with a portion going to the Electric Coin Company, a portion going to the foundation, and a portion going to a group called a Major Grants Review Committee, where they will issue grants associated with progressing the coin going forward, or progressing Zcash going forward, in addition to what ECC and the foundation does. Again, just creating decentralization and independence of any control from any single body. Now on so we don't need an IPO. And by the way, typically you'll hear the term with coins called ICO, which is an initial coin offering, to where firms will come up and look for funding to fund the creation of a coin. When that happens, it throws that company into a series of investment requirements that more similar to what would be a company from a securities offering. We did not do that type of activity. We do not believe Zcash is an investment, and make sure that we take steps to avoid any confusion in that as well. It's definitely a storage of value, similar to what's been said, that Josh Finkelman mentioned as far as Bitcoin. It's strong storage of value, and we do not profess it to be an investment. Let's see, now I got to think back to what your second question was. Your second question was?
Any unique challenges in an M&A transaction?
Yeah, I think there's a lot. So one is being around the coin itself and your revenue stream. Like any investment opportunity, you understand the go forward future revenue potential of that entity and the growth potential. And typically investment firms look for exponential opportunities. Right now, I would say Zcash itself is focused, or ECC itself is focused specifically on Zcash. So we haven't pursued other revenue opportunities. So that's not our market. That's not what we're focused on. We're focused on growing and expanding the utilization and capabilities of Zcash itself. So with other crypto firms, it could be an opportunity. They could be focusing in other areas and creating other revenue opportunities.
Got it. Here's another question. I think they're semi-related. What percentage of Bitcoins held on public exchanges such as Coinbase? And relatedly, is there an ETF that holds Bitcoin that anyone knows of?
I can't speak to the ETF one. I'll let Josh speak to that. But and actually, Josh, do you know, or Andy, what percentage is on exchange? I know 65% of almost never moves. It's probably off exchange.
Yeah, it's tough to know the inventory on exchanges versus off. What we do know is, to what Josh said, is there's a large portion of the outstanding supply that hasn't moved in over a year. Right? People are just holding on to those tokens, essentially, which is a really positive sign. From an ETF standpoint, there hasn't been one. Many groups are trying to put one through, but I think, at this point, really, Bitcoin's market cap is about 200 billion. I think it's just still too small to really have an ETF, because ETFs take, there's a tremendous amount of trading volume behind an ETF. And I just think that Bitcoin as an asset is just not really big enough yet. But, it's our base case that at some point you're going to see a Bitcoin ETF. And right now there are other groups like Grayscale's, Bitcoin Trust. It's a trust offering you can hold, institutions can hold. GBTC is a over-the-counter stock that's pegged to the price of Bitcoin, which you can hold, right? So there are some kind of synthetic alternatives to an ETF out there that you can use.
Awesome. Yeah, there was a member that said exactly what you just said, that ETFs or like Grayscale, GBTC is something similar. So he said it's maybe not directly Bitcoin, but related.
Yeah.
This is one I've always had, and I'm glad somebody asked it, is, and they've asked, why would somebody buy Ethereum or other alternative coins or Bitcoins? And I'm kind of, whatever. I don't care what the digital asset is. Why would you buy one versus another? I mean, for example, Bitcoin's worth 10,744, and there's limited supply of it. And Zcash is worth something like per unit $62. And I'm guessing all these other coins have some measure of value. That one could be 1,000, one could be $50. How do you decide
Yeah.
which one's the right one to buy?
Can I
Yeah.
tell a quick joke before you answer?
Yeah. Go ahead, Josh.
And that is that back in 2017, I used to joke all the time that, wow, the fundamentals of Bitcoin look really interesting because, coming from the street, you're like, what are the fundamentals? What's the balance sheet? Can we, do a DCF model on this particular operating entity before you go out and buy those shares on Schwab, right? Or through your brokerage. This is completely different. That's the joke, is that there are no fundamentals for a lot of these. It's a use case, it's utility. Do you know what do you think of the founding team? Like, for example, if we took Zcash and said, well, what's its use case? What's its utility? What market does it serve? Who's the team? How are they executing? Is there a broad network that supports it? Is there enough mining diversification to secure it technologically? I saw someone asked a question about that. So, in terms of the price discovery, that's a lot of it. And then secondarily, it's what's the appeal to you? Some people are super privacy oriented. I'm only going to go to Zcash and Monero, the big privacy coins. Some people are like, Bitcoin is the reserve currency of the world in the future, and that's the only one. They call it Bitcoin maximalism. Sorry, Josh, I'm stealing the thunder out of all this, but
No.
I'd rather defer to someone. I don't trade it that much, so maybe Josh wants to.
Yeah. So first you have to understand that, there are over 5,000 different digital assets which trade. Bitcoin is just one of them, right? And these different digital assets, they're basically incumbents trying to take out a particular vertical, right? And Bitcoin is predominantly is the store value vertical, right? It's kind of becoming this digital gold. Now, Ethereum is a smart contracts protocol layer where you can build decentralized applications on top of it. So really it's apples to oranges, right? And then, Zcash is a privacy type, digital token. You've got, Link as an oracle, provides data feeds into smart contracts. So you have to think about, much like the internet economy, and you had all these internet stocks, and those companies were doing different things in different verticals. Well, the digital economy with all these different digital currencies, they're doing the same thing, right? You have different digital assets which are predominantly focused on a particular space and niche. And then to what Josh says, you can, do research into the management team of that project and the token distribution and the token economics. And, is there a strong community behind that? Are they getting a lot of traction, a lot of usage? There are all these data points, behind this. So much like, call it the late 90s, we're trying to understand how to price kind of internet stocks. We're kind of at that same, moment in time for these cryptocurrencies and trying to understand how to value them and price them. And they're all very, very different. So you just have to understand that, that this is a really diverse ecosystem.
I might comment on this and just take it up a level because there's a lot of complexities we've just covered. If you look at an illustration of the top 100 in the graphs about activity that happens, most of the coins follow Bitcoin. Okay, if you look at the graph for Bitcoin, you'll see a similar pattern of the majority of the coins down below. So then you get a rising and a lowering tide associated with the market and Bitcoin itself. Bitcoin is the oldest coin, so it's well established. If I had to say which coin to buy, of course I'd say Zcash. So then we'll leave that to the side. But okay, I've said it. But then there's different features. So as has been mentioned, Zcash has a privacy feature. You can trade with shielded privacy, or you can trade without shielded privacy. You can do either one. There's different features with different coins. There's different capabilities. There's different total amounts of issuance. So you have to look at the issuance and where the coin is at in their issuance, how many coins are outstanding, what the volatility is on them. There's a lot of these factors, and they're different by each coin. So these different factors can come into play within the pricing too. So there's a lot of different aspects to valuing and determining what coin is best for you. And these are just some of the things to consider.
Awesome. Well, I have a general rule of thumb that says any webinar that goes 50 minutes has gone long enough. And so we're at that 52 minutes. And so I think what we're going to do here is just end this. We have logged all the questions. I'm sorry I did not get to each and every one of them. I think we covered a pretty good gamut of them, but and I thank you all for those questions. So with that, I'm going to thank our panelists for attending today, and also thank each one of you guys as participants for signing up. And hopefully you got a chance to learn just a little bit more about this. And I know each one of our panelists are more than happy to take on direct questions and be available for whatever makes some sense here for questions. So again, what we'll do is we'll send a thank you to each one of you as participants. We'll ask you if you have other questions, and you can ask them at that time. We'll try to get them answered. And then lastly, this is and was recorded, so you'll be able to ask for that, or we'll send it directly as well. So thank you. Have a great rest of your afternoon. Hopefully some of you had a chance to enjoy a happy hour drink. If not, maybe it's time to go have one. So
Thanks everyone. Thanks, Lou.
Thanks.
Bye, guys.